BigBear.ai is not a normal AI stock. It is a defense, intelligence, border, and trade security company wearing an AI ticker. That makes the story exciting. It also makes the story dangerous because the words sound bigger than the financial proof we have so far. The market wants a simple headline: government AI, huge backlog, stronger balance sheet, and a possible Palantir-style re-rating. The filings tell a colder story. BigBear.ai has real demand signals. It also has flat revenue, negative adjusted EBITDA, negative operating cash flow, a very large share count, and a fresh authorization to issue many more shares if the company needs that flexibility. So this video is not going to ask whether BigBear.ai sounds exciting. It clearly does. The real question is whether BBAI can turn mission demand into revenue, revenue into margin, margin into cash, and cash into per share value. That is the whole thesis. Backlog is the headline. Cash conversion is the proof. Let us start with the reason people care. BigBear.ai reported Q1 2026 revenue of $34.4 million. That was slightly below the prior year. Not a disaster, but not breakout growth either. At the same time, backlog increased 14% from the fourth quarter to $281.9 million. That is the split screen. One side says demand visibility improved. The other side says the income statement has not yet confirmed the breakout. If you only look at the backlog number, BBAI looks like an underappreciated defense AI setup. If you only look at revenue, adjusted EBITDA, and cash flow, it still looks like a company that has to prove the model. The job is to hold both truths at once. The first proof gate is backlog conversion. Backlog is not fake. It matters. It tells you that customers have awarded work and that management has more future revenue visibility than the latest quarter alone would suggest. But backlog is not cash. Backlog is not gross profit. Backlog is not free cash flow. For a company like BigBear.ai, a backlog number has to move through several gates before it becomes shareholder value. The work has to be funded. The customer has to authorize it. BigBear.ai has to deliver it. Revenue has to be recognized. The work has to carry acceptable margin. The operating expense base has to stop absorbing the benefit. Then cash has to show up. That is why the phrase backlog conversion matters more than the backlog headline itself. In Q1, the backlog headline was strong. Management said the backlog increase was primarily driven by a $53 million sole source prime classified award. It also highlighted close to $75 million of Q1 wins across national security, trade, and travel. That is the bull case in one paragraph. This is not a random AI app trying to find a use case. BigBear.ai is selling into mission customers with real operational problems. Defense and intelligence need decision support. Border and customs agencies need better cargo and identity screening. Trade operators need chain of custody visibility. Government customers need secure AI environments where ordinary consumer tools are not enough. That is a real market. But the revenue line still said $34.4 million, down about 1% year over year. That is why the next two quarters matter. If backlog is truly converting, we should eventually see revenue acceleration, not just awards, not just press releases, actual revenue. The second proof gate is margin quality. This was the cleanest bullish number in the Q1 report. Gross margin improved from 21.3% in Q1 2025 to 34.0% in Q1 2026. That is a meaningful improvement. The company said the improvement was helped by higher margin generative AI platform and product revenue from Ask Sage. Ask Sage is important because it changes the story from mostly services and customized solutions toward a potentially better margin platform layer. If that platform layer repeats, BigBear.ai can become more interesting. But one quarter does not prove a durable margin profile. The key question is whether 30+% gross margin is a new base, a temporary mix benefit, or a number that fades once project mix changes. That is why I do not treat gross margin as a victory lap yet. I treat it as a gate. If gross margin stays above 30% while revenue grows, the bull case gets stronger. If gross margin falls back toward the low 20s while revenue remains flat, the thesis gets weaker. The third proof gate is operating leverage. This is where the story gets harder. BigBear.ai reported a Q1 net loss of $56.8 million. Adjusted EBITDA was negative $9.9 million. Operating cash flow was negative $18.0 million. Those numbers do not mean the company is doomed, but they do mean that demand and margin improvement have not yet reached the bottom of the model. The company has a large liquidity cushion. At the end of March, available cash and investments were about $431.5 million. That gives management time. But time is not the same thing as proof. A cash cushion can fund product development, acquisitions, integration, and sales growth. It can also mask a business model that has not yet learned how to convert demand into cash. That is the cash burn test. If operating cash flow improves over the next few quarters, liquidity becomes a strategic advantage. If operating cash flow stays deeply negative while revenue remains flat, liquidity becomes a runway that investors have to watch carefully. Now let us talk about the biggest narrative upgrade since the old BigBear.ai story. Ask Sage. BigBear.ai completed the Ask Sage acquisition at the end of 2025. The annual filing describes Ask Sage as a secure, platform-agnostic generative AI solution designed for defense and intelligence customers. That matters because defense AI is not just ChatGPT with a government login. Sensitive agencies need controlled environments, authorizations, auditability, security boundaries, and the ability to handle sensitive workflows. Ask Sage gives BigBear.ai a more product-like asset inside markets where ordinary AI tools may not be allowed. In Q1, management said Ask Sage revenue helped offset lower volume on Army programs. That is exactly the kind of mix shift investors want to see. But here's the catch. Ask Sage has to be more than an acquisition headline. It has to increase revenue, improve gross margin, and eventually reduce the company's dependence on lower margin project work. The proof is not that BigBear.ai owns Ask Sage. The proof is that Ask Sage changes the financial shape of BigBear.ai. That brings us to the government customer problem. Government demand can be sticky, large, and mission critical. It can also be slow, political, and hard to forecast. BigBear.ai's own risk disclosures make this clear. Government budgets, program starts, spending priorities, delays, audits, contract rules, and procurement decisions can materially affect revenue. That is why government AI is not automatically a premium business. It can become a premium business if the company creates repeatable platforms with strong margin and high customer need. It can remain a difficult services business if every contract behaves like a custom project with timing risk and cost pressure. That is the difference between an AI contractor and an AI platform. BBAI is trying to move closer to the platform side. Investors should watch whether the numbers confirm that move. The trade and travel story is the second engine. In May 2026, BigBear.ai and International Shipping Compliance announced the first deployment of an AI-powered supply chain security platform in Panama's Dry Canal. The announcement matters because it is not just AI for defense in a vague way. It connects BigBear.ai technology to cargo security, biometrics, chain of custody, real-time fleet and driver data, anomaly detection, and customs intelligence. That's a specific problem. Global trade is enormous. Ports move containers at huge volume. Customs agencies can only physically inspect a fraction of cargo. Criminal organizations can exploit lawful trade routes. So the product logic makes sense. The risk is commercialization. A first deployment is not the same thing as a large recurring revenue stream. It is a proof point. It is not the whole proof. The question is whether Panama becomes a reference customer that leads to broader regional adoption, shipping line partnerships, port operator wins, and repeatable software economics. That is why the right visual for this part is not a giant AI brain. It is a chain of custody gate. Who handled the container? Which vehicle moved it? Did the route change? Did the seal profile change? Did a risk signal appear early enough for customs to act? That is the actual story. Earlier in January, BigBear.ai also announced a strategic partnership with Macta Technologies, the digital arm of AD Ports Group. That partnership was framed around next-generation customs and border operations solutions for ports and governments. It is another useful signal. But again, a partnership is a gate, not the finish line. The bull case says BigBear.ai is building a trade security platform layer across ports, borders, customs, and logistics. The bear case says these are promising announcements that still have to become material recurring revenue. That brings us to the balance sheet. This is one reason the BBAI story is different now than it was before. In January 2026, BigBear.ai announced that the $125 million of 2029 convertible notes had been converted into common stock, eliminating that debt without material cash outlay. By the end of March, the 10Q showed total available liquidity of about $431.5 million and total debt of $17.7 million before debt issuance costs. That is a real improvement. Interest expense fell sharply. Management now has room to invest. But the balance sheet reset came with a per-share reality. The weighted average share count in Q1 2026 was about 473 million shares, compared with about 252 million a year earlier. That is a huge change. This is why per-share value matters. A company can reduce debt, raise liquidity, buy assets, and still make the common shareholder do the math on dilution. And then the June 12th filing added a new governance signal. Shareholders approved an amendment increasing authorized common shares from 500 million to 1 billion. That does not mean BigBear.ai issued 500 million new shares the next day. It means the company now has more authorized capacity. That flexibility can be useful. It can support acquisitions, compensation, financing, strategic moves, or balance sheet management. But for common shareholders, it is also a risk gate. If the company uses share capacity to fund value-creating growth, the decision can make sense. If it uses share capacity while revenue and cash flow fail to improve, per-share value can suffer. That is why dilution is not a side issue in this video. It is central. The real stock question is not, can BigBear.ai grow? The real question is, can BigBear.ai grow per share? Now let us separate the bull case from the hype. The bull case has 5 parts. First, the company operates in markets where urgency is real: national security, defense, intelligence, border security, customs, trade, and travel. Second, backlog increased to $281.9 million, giving more visibility than the revenue line alone shows. Third, Ask Sage may create a higher margin generative AI layer inside government and enterprise workflows. Fourth, the trade and travel platform story has started to move from partnership to deployment. Fifth, the company has enough liquidity to execute if management can convert the pipeline. That is a legitimate bull case. But it is not a complete thesis yet. The missing piece is conversion. Revenue has to accelerate. Gross margin has to hold. Adjusted EBITDA has to move toward break even. Operating cash flow has to improve. And dilution has to be disciplined. The bear case is just as clear. Revenue is not growing yet. Operating cash flow is negative. Adjusted EBITDA is negative. The company is still integrating acquisitions. Government contract timing can disappoint. and shareholders just approved a much larger authorized share base. That does not mean the stock is bad. It means the stock belongs in a proof box, not a quality box. A quality box stock already has repeatable conversion economics. A proof box stock has a credible path, but the evidence is still coming. BBAI is in the proof box. The next investor update should be judged by 5 numbers. First, revenue. If full year guidance is $135 million to $165 million, the second half has to carry meaningful weight. The midpoint is $150 million. Q1 revenue was $34.4 million. That leaves more than $115 million for the remaining 3 quarters if the company is going to hit the midpoint. That is possible. But it has to show up. Second, backlog. Backlog should remain healthy, but backlog alone is not enough. The better question is whether backlog and revenue move together. Third, gross margin. 34% gross margin is encouraging. The next test is whether it repeats. Fourth, adjusted EBITDA. A company with strong demand and improving gross margin should eventually show narrowing adjusted EBITDA losses. Fifth, operating cash flow. Cash flow is the hardest proof because it cuts through the narrative. If those 5 metrics improve together, the thesis changes. If they split apart, the risk rating stays high. Now, what about the Palantir comparison? It is tempting. Both companies talk about government, AI, decision intelligence, operational data, and mission customers. But the comparison can be misleading. Palantir has already proven a much larger revenue base, profitability profile, and platform perception. BigBear.ai is earlier, smaller, and still proving conversion. That is why a Palantir-style narrative can help explain the excitement, but it cannot replace the financial proof. The better comparison is not, is BBAI the next Palantir? The better question is, what would BBAI have to prove before investors could even begin making that comparison responsibly? The answer is simple. Sustained revenue growth, repeatable platform margin, better adjusted EBITDA, better cash flow, lower reliance on share issuance, and evidence that Ask Sage plus trade security deployments are building a repeatable product engine, not just a project backlog. Until then, the comparison is a hook, not a thesis. There is also a political angle, but it should not be treated like a conspiracy. BigBear.ai is led by people with deep government and security backgrounds. Its markets are shaped by procurement, border priorities, defense modernization, customs enforcement, and the way governments adopt secure AI. That is real. But the correct research question is not whether there is some hidden political shortcut. The correct question is whether policy priorities translate into funded awards, contract execution, revenue recognition, and margin. Policy can open doors. Filings prove what came through the door. That is the standard. So what would upgrade the BBAI story? A quarter where revenue accelerates while backlog remains strong. Gross margin stays above 30%. Adjusted EBITDA loss narrows. Operating cash burn improves materially. Ask Sage contribution becomes more visible. Trade and travel deployments expand beyond isolated announcements. And management uses the larger authorized share capacity carefully. What would downgrade the story? Backlog grows, but revenue stays flat. Gross margin fades. Cash burn remains heavy. Adjusted EBITDA does not improve. New share issuance rises without clear per-share value creation. Or government contract timing pushes revenue further out. That is the research frame. The story is not empty. The risk is not empty either. BigBear.ai has a real chance to become a more interesting public AI company than the current revenue line suggests. But it has to earn that upgrade in the filings. The bottom line is this. BBAI is not just an AI hype ticker. It is a backlog conversion test, a margin quality test, a cash burn test, and a dilution discipline test. If BigBear.ai passes those gates, the stock story becomes much stronger. If it fails those gates, then the backlog number and the AI label are not enough. For now, BBAI belongs in the proof box. Watch revenue, backlog conversion, gross margin, adjusted EBITDA, operating cash flow, and share count. Those numbers will tell us whether BigBear.ai is becoming a durable mission AI platform or whether it remains an exciting story still waiting for cash proof. Educational only. This is not financial advice. No buy, sell, hold, or price target recommendation.